Intel, the dying giant or the rising star. Intel over the last few years has been a very polarizing company. Some view the company very positively, most view the company negatively. Today we will examine whether Intel is a dying giant or has a bright future ahead of them. Today we'll examine how Intel fell from grace, the current challenges and competitive pressures they are currently facing, what they can do to overcome these challenges, and whether or not these efforts will be worth it and successful. Today I'll cover these competitive pressures within the context of the market. However, I will cover Intel's response to these pressures within the context of their business units specifically. The first of these competitive pressures we'll look at is AMD, who was not considered a strong competitor in the first half of the 2010s, but with the introduction of the Zen architecture in the second half of the 2010s, has seen a very strong resurgence. To put it into context, at the time of AMD's resurgence, Intel held over 95% of the data center market, and currently today that stands at less than 80%. Of all the competitive pressures facing Intel, AMD's is the most straightforward and traditional. They tend to compete with Intel on an even footing and with similar strategies and goals. But Intel also faces other competitive pressures, including the ISA wars. And ISA is best thought of as the language the semiconductor speaks. The market has sort of consolidated over x86 and ARM in the last few years, with Intel and AMD both producing x86 based CPUs. ARM historically was for low-powered devices and integrated circuits. Think like mobile phones, smartwatches. However, in the last few years, the performance of these ARM chips has expanded at a rate faster than the power consumption of x86 chips can decrease. So what this means is we're starting to see markets that were historically exclusively dominated by x86 processors, such as laptops, no longer have a monopoly on this. We see this with Apple's release of their M1 processors, introducing ARM into mainstream laptops, and even with Amazon and their Graviton processors bringing ARM to data center. The threat posed by ARM is much more impactful to Intel than the threat posed by AMD. The way to counter AMD would be for Intel to make a better product. But if the overall market trend is to shift away from x86, which is Intel's strong suit and main core product, then this poses an existential threat to their company. Intel has several ways to respond to this threat, and we'll examine them later on in the presentation. These include Intel possibly making their own ARM chips, licensing out x86, or switching to manufacture ARM chips for other companies. The next big competitive pressure is the design fabrication paradigm. Intel designs and manufactures their own chips. Now, this is in contrast to much of the semiconductor market, where design and fabrication are split into different companies. AMD, NVIDIA, Apple, all of these companies design their own semiconductors, but they're not manufacturing them. They outsource to other companies. Now, while there are many fabrication companies, there are only three real options if you need to mass produce a leading node semiconductor. These are Intel, TSMC, and Samsung. Now, currently, Intel does not manufacture custom designed chips for other companies, although part of their main core plan for their resurgence is for this to change. ASML is also a big factor in this. ASML at this point has a near monopoly on the machinery required by these advanced semiconductor assembly lines. So every year, essentially, Intel, TSMC, and Samsung are competing with one another for this limited supply of machinery. And the final competitive pressure that Intel faces is the rise of GPU-centric compute. Intel's core business is central processing units, and they've always had a symbiotic relationship with NVIDIA, who supplied GPUs. One of the issues that Intel is facing now is that GPU compute in data center is growing in importance, including in scientific workloads. Some data centers don't really even care what CPU they use in their racks as long as they have robust NVIDIA graphics cards. Part of the reason all of these competitive pressures are affecting Intel so much is due to their own failings in the latter half of the 2010s. In 2016, Intel was planning to debut their 10 nanometer based product line. And had this product line debuted on time, it would have only further solidified Intel's lead. The issue was the 10 nanometer products were a massive step forward in node density compared to their 14 nanometer, whereas TSMC and Samsung tend to take more conservative approaches in their generational improvements. 10 nanometer tried to take a large step without Intel purchasing the new ASML EUV machines of the time. For many other technical reasons outside the scope of this video, 10 nanometer failed, and it didn't debut for another 5 years. And while it wasn't a terrible product when it eventually came out, this misstep gave AMD the opportunity to rise again. Intel also had other issues at this time. Leadership was very confident in Intel's market lead and didn't aggressively try to expand or maintain that lead, instead focusing on enhancing profits and not focused on expanding R&D. In the next several years, we're going to see the market begin shifting to what are known as gate-all-around transistors. Now, major shifts in technology such as this can introduce new leaders and losers in the market, as some companies may struggle to adopt this new technology. And part of this success comes down to improving the machinery used and supplied by ASML. While not necessary for gate-all-around, the next generation of high-NA EUV machines from ASL greatly improves the likelihood of success for these new designs. So one major competitive advantage that Intel could see themselves having is they are the first customers for ASML's next generation of twin-scan high-NA EUV machinery. While this lead won't last forever, they will have a short period of time where they are the exclusive owners of such equipment. This should be sometime in maybe 3 to 4 years. One thing the COVID-19 pandemic and subsequent lockdowns exposed to the world was the fragility and importance of the semiconductor supply chain. Semiconductor shortages rippled throughout the entire global economy and caused shortages on a wide variety of other products as well, including automobiles. And this led Western politicians to view semiconductors with the same geopolitical and strategic importance as oil. In response, the US and the European Union both passed subsidy plans with over 50 billion in the US and 40 billion euros in Europe. The purpose of these subsidies is to help onshore the production of semiconductors, as currently the majority of semiconductors are manufactured in Asia, with the most important of these companies being TSMC in Taiwan. The West sees Taiwan and China going to war as enough of a possibility to want to rapidly onshore as much semiconductor production in the West as possible. Because these subsidies target the manufacturing of semiconductors and not their design, Intel stands to gain a lot, whereas AMD and NVIDIA stand to gain very little, if anything. While these subsidies will also help onshore some Samsung and TSMC production facilities, Intel is the only Western company among them in the leading node space. The West is very focused on onshoring as much production back to the West from Asia as possible. With most Asian production focused around Taiwan and South Korea, There are certain concerns regarding a Chinese invasion of Taiwan. If this were to occur, TSMC would either have all of their leading node fabs destroyed or seized by the Chinese government. A war of this nature may also include North Korea and South Korea. Now, we're getting into the realm of hypotheticals, but having all of the world's, or rather a large majority of the world's leading node fabrication in these two nations is geopolitically a massive threat to the West's security. Semiconductors will only continue to grow in importance throughout the 21st century, and it will be looked back on in terms of importance as we do look back now on oil in terms of geopolitical importance in the early 20th century. In recent years, many people have foregone owning Windows PCs altogether. Instead, their only computer they own is their smartphone, perhaps possibly an iPad. While entering into the handheld space was a missed opportunity for Intel, the silver lining to this was that all of these mobile phones primarily relied on cloud services and apps, and these cloud services were powered by data centers that Intel primarily was the main supplier of. However, with the data center market under pressure from AMD and ARM-based custom silicon, the mobile market expanding and taking away potential customers from laptops and desktops is an even bigger threat now. Convincing these consumers to abandon their primary or only computer being a handheld and also embrace a laptop is something that's, for the most part, outside of Intel's control. However, if their foundry expands to include this custom silicon that goes into phones, then the fact that these phones aren't powered directly by an Intel product is less of a concern. One of the key innovations that AMD's Zen architecture brought in the latter half of the 2010s was the introduction of chiplets to the mainstream. Without getting too technical, chiplets are essentially a way for a company to design individual subcomponents of semiconductors in such a way that they can build the final product sort of like Legos, adding or subtracting as much cores as necessary for that particular SKU. It also allows for easy harvesting of defective components. AMD will specifically build these 8-core chiplets and build processors in increments of 8 based on how many of these chiplets they add. Now, if a chiplet is defective and say has only 6 or 7, maybe 5 or 4 working cores, then they can also bin this out into multiples of 6. Intel, on the other hand, still uses a fairly traditional monolithic design, and while there are advantages to monolithic designs when you have lower core counts, they don't scale very well to high core counts. This design difference between the two is the primary reason that AMD has had such a strong resurgence in data center. Because of this chiplet design, AMD is able to offer significantly more cores for the dollar. And in some of their upper end SKUs, they offer more cores than Intel offers at all, period. Now, Intel hopes to counter this with their own version of chiplets with the debut of their Meteor Lake line in consumer and Sapphire Rapids in data center. Now, Intel's approach is slightly different to this, and I won't get too much into the technical details of how it's different, but it is certainly an advantage that AMD has had for the last few years. Another advantage that AMD enjoys is that at the moment TSMC does offer a higher quality node than Intel. Although this gap is rapidly closing in the client and data center markets, the improvement is still there. This advantage that AMD enjoys thanks to TSMC allows them to offer, in many cases, better performance per watt of electricity. And in data centers that run hundreds and hundreds of servers 24/7, this power consumption difference leads to lower cooling costs and lower operational costs. Now, one of the issues these companies have been having for the last few years is as the performance gap begins to tighten and the companies are offering similar levels of performance, they will oftentimes factory overclock these components to the point where power consumption is really off the charts. And oftentimes they may double the power consumption just to eke out an extra 5 or 10% performance. Now, while a tech-savvy user could dial this back in to a more reasonable level, this is the default behavior and it will be experienced by the majority of customers. Despite this design decision, all companies are making progress in performance per watt, which realistically is the only measure of technological progress. Now, while Intel had gotten in trouble for some anti-competitive behaviors a little over a decade ago, currently the legal attitude towards Intel is to try and essentially support it as much as possible. It is too strategically important to the West and the Western militaries for their most advanced semiconductor manufacturer to go under. Intel's stated mission statement is their mission is to delight their customers, employees, and shareholders by relentlessly delivering the platform and technology advancements that become essential to the way we work and live. Although many would argue they have failed to live up to this promise in recent years. While Intel's core business may be CPUs, they offer a wide variety of products. They've recently re-entered the GPU market. They offer systems on chips, EA6 motherboard chipsets, network interface cards, modems, solid-state drives, Wi-Fi and Bluetooth chipsets, and vehicle automation sensors. One of the overlooked aspects of Intel is their large services and software division. Now, they offer a wide variety of solutions, including One API, which is a programming model to unify development across CPUs, GPUs, FPGAs, and AI accelerators. Celadon, which allows developers to run Android apps in VMs or containers. They offer AI frameworks, industrial messaging platforms for data collection and monitoring, as well as WorkZone analytics. Through their recent acquisition of Mobileye, they also offer a wide variety of self-driving software solutions for intelligent vehicle traffic management, insights into fleets for truck companies, license plate recognition software, cargo management, and many more. Intel has employees located in 46 countries, and they operate for the most part globally, but primarily focused on developed nations. We may see some restrictions in the future regarding their business dealings with China. Recently, NVIDIA was ordered by the US government to stop selling some of their most advanced components that help AI development to the Chinese government and Chinese companies. So it is certainly possible that some of Intel's more higher end components see the same sort of restriction in the near term. They've recently also pulled out of Russia as well as a result of the Russian-Ukrainian war. Now, some of Intel's competitors are listed below. AMD is the most widely recognized of their competitors to the average consumer. Now, they compete directly with the CCG and DCAI in x86 compute, and they compete with Intel's recent AXG in graphics. AMD has a fairly mature graphics offering at this point, and Intel's is relatively just starting out and not anywhere near competitive at the moment. But AMD competes directly for laptop, desktop, and server customers with CPUs. NVIDIA has not historically been seen as an Intel competitor due to their relationship, whereas AMD offers both CPUs and GPUs. Intel has been extremely focused on just CPUs, and NVIDIA has been extremely focused on just GPUs. And although the two companies do offer GPUs and CPUs respectively, they're really more side projects in the overall grand scheme of things. But with Intel's recent entrance into the GPU market, they are now directly competing with NVIDIA. Now, I've listed ARM as a competitor to Intel, more so as a catch-all for the wide variety of companies that design ARM-based CPUs. And these companies include Qualcomm and MediaTek, some of the main suppliers for like Android phone CPUs, system on chips. But also Apple. Apple was recently switched to using their own ARM-based custom silicon for their laptop and desktop line. Apple was before this an Intel customer, so losing this contract was pretty painful to the bottom line. But also Samsung. Samsung also builds their own CPUs that they design in-house and manufacture in their fabs. Is primarily focused on using niche chips in their Galaxy phones in non-US markets. Amazon recently has started offering their Graviton custom ARM chips to their AWS customers. And these are services that were previously powered by Intel Xeon and AMD EPYC CPUs, and those are still the main offerings of Amazon AWS. But the entrance of Graviton into this certainly has these two companies on edge. In very recent years, Microsoft has started dabbing into custom ARM chips with their SQ line, which are not really widespread but have seen some use in their own custom designed Surface line of laptops. And then as for their other competitors, Samsung and TSMC, as previously listed, will be competing directly with Intel for foundry services. Now, a big part of this competition will be Intel competing with Samsung and TSMC to try and secure the manufacturing contracts for the previously listed Qualcomm, MediaTek, and Apple chips, as well as Amazon and Microsoft. Intel's strengths are their vertical integration and their large capacity. While AMD does offer the better CPU for data centers, they haven't been able to capture more market share than they could have due to the fact that they just can't offer the same volume at this time that Intel can, as they have to compete with other companies for TSMC's allocation. Intel also offers a wider solution stack in data center than AMD. Despite the fact that their CPUs are for the most part uncompetitive, for a small business looking for a fairly relatively low-end data center CPU, the differences between the two companies start to become less noticeable than at the higher end in the large contracts. And for these small businesses, Intel offers a wide variety of solutions, like the network interface card for the server, as well as software options. And if a customer were to check an OEM website, say through HP Enterprise or Dell, they may see 9 Intel servers for every 1 AMD server available for purchase, and just this wide variety of options. Sometimes the best fit may be the Intel option just because the OEM is not offering a comparable AMD option. And this by no means that Intel has a good position in data center. It just means that there's some silver linings and strengths that they hold on to. Now their weaknesses are, and this is probably the main weakness, is that they are generationally behind TSMC in their node fabrication. And not all of TSMC's customers have access to this generationally more advanced node, but at the time of this writing, AMD does with their new Zen 4 line of CPUs. And Apple has access to even more advanced nodes than that, and they're typically the first customer with these debuts. Some of the opportunities presented to Intel, however, include the fact that they are strategically important to Western governments. I just can't see the US government or the European Union letting Intel fall. And they will continue to throw billions in subsidies their way to make sure that Intel can compete on equal footing with Asian offerings. And part of the stipulation to these subsidies is that Intel does offer their fabrication services to other companies. This works out for Intel as well because it does help alleviate some of their more existential threats like custom ARM silicon. But let's not forget that Intel did struggle a lot with their 10 nanometer development. Future failures are not necessarily determined by previous failures, but that is certainly something that weighs heavy on the minds of investors. Intel does have an aggressive roadmap ahead of them for their node development, and if they fail to execute on that, it could be a very painful few years. So some of Intel's strategic planning going forward, we'll examine this based on 4 of their SBUs. I know that Intel comprises of more than 4 SBUs, but they're for the most part outside the scope of this video. Now in the laptop segment, Intel is somewhat competitive. AMD certainly has better advantages such as better integrated graphics and can offer more performance at lower watts. But Intel still has just sheer volume. AMD can't produce enough chips to actually satisfy market demand. So by extension, a lot of laptops will just have to offer Intel chips by default. Although the growth of ARM in this segment, such as Apple or Microsoft Surface offering some SQ custom chips, the growth of ARM is certainly a threat that hopefully is neutralized through IFS. It doesn't really matter to Intel if some Microsoft laptops switch to custom designed silicon instead of an Intel chip. If Intel's IFS division can secure the manufacturing contract for that, because whether or not they can secure that contract, the decision to switch to this custom silicon has already been made. Custom silicon can be tailor designed for a specific product in ways that an Intel general purpose processor just can't. Now, the desktop segment is probably Intel's most competitive consumer division. However, it's really the least important. While they may be strongly competitive in the sub $500 market, it doesn't really matter when they're losing in data center and slightly behind in mobile. And now keep in mind, when I'm talking about these prices, I'm talking about Intel chip prices and not the price of the desktop itself. Well, in the over $500 market, it's a little bit less clear which competitor has the better product. And in the over $1,000 segment of the desktop space and the workstation space, AMD is just the winner by default for the fact that Intel at this time has mostly abandoned this market. Now, Intel's plan, which they debuted with their 12th generation of Core i series in 2021, is this split P and E core offering. Instead, whereas Intel can't compete directly on core counts with AMD using their traditional cores, they've designed this CPU where it'll have a handful of high performance cores with a large amount of these tiny efficiency cores. And the logic behind this decision is that workloads will typically either care about the maximum performance of a single core or as having as many cores as possible. And so having these two different design choices on a single chip, in Intel's mind, helps them cover a wider range of workloads with a single product. And this will tie into the previously mentioned Intel Tile, their chiplet competitor, as well as Intel IFS's aggressive node map. Now, the CEO, Pat Gelsinger, has gone on record to say that he believes Intel will regain full competitive advantage in this segment by 2025. Whether that happens is remaining to be seen. The second part of the strategic plan is in the DCIA SBU. Now, data center is one of Intel's most important markets. And at this time, their only true competitive advantage is their volume and their reputation. AMD is making rapid headways into this market, whereas Intel's growth in data center is slower than the growth of the overall data center market. And they may be competitive in their lower model SKUs, but in the higher end SKUs where the big contracts like, let's say, Microsoft Azure, Amazon AWS, they're just not at this time competitive with AMD's products. Now, Intel hopes to stop the bleed with their Sapphire Rapids line. It may be too little too late. It was originally planned for 2021 and would have been a fairly good product in 2021, but it's been mostly pushed back to early 2023. And by that time, it just may be too little too late. Intel has since changed their messaging to really focus on their Granite Rapids line planned for 2024. They believe that this will mark a huge step forward for them. We have no details really what this product line will entail, but they seem fairly confident on it, so we'll have to wait and see. And now, mentioned earlier with the P and E core designs on the consumer chips, these are not this is not the case for data center. Intel splits the P and the E cores into two distinct product lines. That'll be Granite Rapids and Sapphire Rapids for the P cores, and then in 2024, the introduction of the E core based chips with Sierra Forest. Intel also hopes to leverage their AXG division with server-based graphics cards so that they can offer a more complete product suite to their customers. Now, Intel IFS is the most important part of Intel's recovery plan. Owning fabs is one of the most unique advantages that Intel has. AMD, Nvidia, Apple, they don't have their own fabs, neither does Amazon or Microsoft. And while Samsung does, Samsung has a very, very limited product portfolio of their own custom designed silicon manufactured in their own fabs. One of the advantages that TSMC enjoys is that because they have such a wide and diverse range of customers, they have a lot of cash flow coming in. They have a lot of feedback with different design partners that help them in their design process of their nodes. Intel making only their own chips doesn't get this. This plans to change sometime around 2025 likely. Their Intel 20A node is contracted to be used for Qualcomm's chips. So Intel already has some of these ARM companies on contract in the next 3 years. But the big part of this is IFS really mitigates the existential threats they face. There are certain market trends that Intel just can't reverse. The use of smartphones as the only primary computing device among some consumers, the use of custom designed ARM silicon by some companies, these trends are not going away. If IFS can secure these manufacturing contracts, then these threats are for the most part largely mitigated. AXG is another really important part of Intel's revival plans. Hardware acceleration in the client space, video gaming, which is a larger market than movies, virtual effects design, 3D modeling, scientific workloads, all of these benefit from GPUs primarily and not CPUs. So NVIDIA has had massive success in this market with a larger market cap than Intel at the moment. Intel hopes to, instead of relying on the symbiotic relationship with NVIDIA, capture some of this market for themselves. And they believe that they will be able to better integrate their CPUs and GPUs than having to rely on a third-party supplier. Whether this happens remains to be seen, however. On one hand, Intel can offer CPU and GPU combos at a discount to laptop OEMs, but also GPUs are incredibly difficult to design, and without drivers, they're paperweights. Driver design is a huge part of this because driver design requires years of usage and feedback to dial in. So at this time, Intel just released their first line of discrete graphics cards called Arc Alchemist, and they're for the most part not that competitive. They have had to overcome their driver deficit by using larger die sizes, which lowers the margins as well as lower costs and higher power consumption, and still compared to the NVIDIA counterparts because of this driver deficit, they're just not a good purchase. The only solution to this problem is just time and R&D. As long as Intel continues sticking with graphics cards development, there stands a good chance that they will eventually be successful to a certain extent in this. Now, I bring up Q2 2022 specifically because this quarter was a huge deal for Intel. It was terrible. Some of the worst financials they've ever reported. Their GAAP revenue year over year was down 22%. EPS was 11 cents loss per share. Gross margin took a huge hit, down to 36.5% from 57 the same quarter prior year. Operating margin was a loss, one of their first losses since the 90s. Their net income was also a loss. Now, the silver lining to this, and this is a very minimal silver lining because these financials were terrible, is that the increase in R&D allocated year over year was larger than the net income loss. So in theory, if Intel had kept their R&D spending at the same amount, they would have had positive net income. Intel does have a large cash reserve that they can sustain a few quarters of net negative income. While not ideal, at least they're committed to increasing their R&D so that their long-term prospects are much better off. To break this down by SBU, CCG is down 25%, DCAI is down 16%, IFS is down 54%, AXG is up 5%. They have some other SBUs such as their Network and Edge, which is up 11%, and Mobileye, which is up 41%. Now, for short-term cash flow issues, Intel hopes IPOing their Mobileye line will help in this regard. In 2017, they acquired Mobileye for $15.3 billion, and they're hoping that valuation target for their IPO is 15.9. Their hopes are to raise $820 million, and their IPO target will be 10 to 20% of shares. Intel doesn't see any recovery for DCAI until 2024, the earliest. And IFS won't really see much action until 2025. So to keep investors around, Intel is committed to their dividend, despite some protest, as the valuation of the dividend is higher than their net income loss. The CEO Gelsinger believes that 2022 is the rock bottom for their financials. Time will tell. The global market is in a retraction, so what impact this will have on Intel, we'll see. But really the key aspect to all of this is just how important, and this cannot be understated, how important the US and European Union government sees Intel between the European Chips Act and the US Chips Act. And for future investments, Intel is looking at over $100 billion for the next decade into Europe, and over $100 billion in just their Ohio fab. Their initial investment into Europe will be 33 billion euros, 17 billion of which for a fab in Germany, as well as R&D hubs in France and R&D and manufacturing in Ireland, Italy, Poland, and Spain. Even the state government of Ohio has stepped in and offered over $2 billion in incentives just for the Ohio fab. And this is the Ohio fab that will be producing their 18A and 20A nodes. The 20A will be used and built in Ohio for the Qualcomm contract. Now, if you look at Intel's stock, their PE ratio is under 6. It seems that investors have mostly baked in failure into the share price. If IFS is as successful as Intel hopes it to be, then Intel stock is severely undervalued. But keep in mind there is significant risk. So in conclusion, Intel will be in severe trouble and pain in the short term, but they are geopolitically important to the nations of the West. These governments want to see Intel succeed. I have strong doubts that they'll let them fail at their ventures. Now, if their plan is executed properly and all goes according to it, then it'll be a huge transformation for the company. I'm personally fairly bullish on this plan. I think if it executes accordingly, Intel will regain market leadership. However, there are many reasons given Intel's history to doubt this. And TSMC and Samsung are not going to just sit back and allow this to happen. They are also trying as well. NVIDIA still is the market leader for graphics cards. AMD is still a healthy company that offers great products. But there are certain advantages that Intel has by having a presence in all of these markets. And if they can tie it all together, I am bullish on their success.